Hi, I'm Peter Rose, founder of Longwood Currency Trading. Correct your Forex trading mistakes, a plan to make some money. I want to reach out to you guys that are sending me emails. Thank you so much for the communication. I mean, that's the way I like to communicate with you rather than in comments. I appreciate the comments, although many people don't leave comments. They send me emails instead, and I appreciate that. But so many of the emails, and I'm not flooded with them, okay? I have a small channel here, but a lot of the folks that I am hearing from are having trouble understanding how they can make money like the guys that they're seeing driving around in the Lambos and stuff. Forget that stuff. You don't have $1 million in your account. You don't have 6 figures in your account like I do. Just forget all that shit. You're taking too many chances trying to live the good life before you've got the money to support that. You've got to back up and give it time. You know, if you bought a piece of real estate like I did when I was in my mid-20s, I started buying real estate. And a lot of those properties that I had bought, I kept them for 20 and 30 years. That's where the money was. If you flip the real estate, you'll spend the money and go into Cancun and then take some of it and reinvest it. But that money that you take out, that $4,000 that you take out, if you compounded that over 20 years, you wouldn't be going to Cancun. You'd go to Cancun and around the world in 20 years because that money would compound into significant sums. So you're not going to take your $10,000 account and run that to $1 million. You might be able to take it to $100,000 in 18 months if you have 20 years of experience and you're willing to take the risks necessary in order to get a 10x in under a year. Can you double your money? Well, yeah, maybe. Let's say you had $10,000 and you were able to double it to $20,000. What are you going to do with that? Are you going to take that $10,000 out and then double the 10 that remains and live on the other 10? Are you going to leave the 10 in there, so now you've got 20 and you're going to try to double that to 40? And then you take the 40 and you try to double it to 80. How many times do you think you're going to shove it all to the center of the table and walk away with anything? You're not. There was a famous Chicago pit trader. His name was Joseph Gibbons. And I saw a video of him talking, and he said, it's not how much money you make, it's how much you keep. And that's really the secret to it. Most of you folks that are emailing me, I'd say probably 80% are under 25 years of age, 30 years of age. You've got the time to make this work. So if you start it right, you've got all that time to compound. A lot of the folks that email me that are in their 50s or 60s, I didn't even start looking at currency markets until I was in my 60s. They're fearful. They see everybody's making money, but I'm afraid. When I try to talk with them and say, well, what are you willing to do? How hard are you willing to work? Well, you know, I've only got X amount of dollars and I don't want to lose it. Well, you got the wrong mindset. You're not going to lose that money. You're going to take a little bit of your money and you're going to lose that until you learn what not to do. And once you figure out what not to do, I can show you how to identify clearly the stuff to do so that you can move on from there. Now again, I'm not talking or able to teach beginners. I'm retired. I'm not trying to run a training company here, and I cannot drag people across the finish line. I'm not trying to convince people to take courses or consulting from me. I can't help you if you're a beginner. You watch this video channel and you go to other resources, learn what a pip is, do your study on Bollinger Bands and Fibonacci's and put those all on your charts, and when you lose all your money, you've got some experience, and then maybe some of the stuff that I'll be talking about would be of value to you, And if you think it's of value, then we can talk about coursework and consulting and all that other stuff, because at that point you'll be receptive to the expense necessary in order to do it right. Do you want to learn how to shovel rocks and building a waterway in somebody's backyard? Or do you want to learn how to be a brain surgeon? It's going to take you longer to learn how to be a brain surgeon. It's going to cost you more money to learn how to do that, but the rewards are greater at the other end. If you risk more money in a trade, you're risking that money in order to make a lot of money. If you don't have a lot of money, then you don't risk it. You play it conservatively until you learn what the key elements are to the trading process. And then maybe you push it to the center of the table, knowing that, oh, geez, if I lost 30% of it, I've got the skill to make that back. Now, how long will it take you to make that 30% back? Well, you figure it out. It'll probably take 40% return on that 40 or 50% return on that 30% loss in order just to get back even. You have to be a pretty good trader if you're going to make 40% in a year. So maybe you're at 20%, so it'll take you 2 years to make that 30% back. Well, that's the thing that we have to work together with in order to determine when you're ready to push it to the center of the table. If somebody's going to take a training from me, it isn't just, well, here's your training and we've completed it and you're gone. I'm going to work with you for the rest of your life. We're going to be trading together. That's the community that I want to build. I don't need 100 people. I don't need 1,000 people. I don't want 100 people. 3 or 4 or 5 is fine, because then we can share emails and we work together and help you through the stuff that I went through when I was trying to learn how to trade and was unfortunately got the wrong scoop from the education that was out there. It isn't that the information is wrong. The information is correct. It's just there's so much of it you can't figure out what's important. There's no presentation of the order of importance in that information. If you look at any glossary in a FOREX training book, an educational book, there's 8 or 10 pages of terms. I think there's 4 or maybe 5 generic terms that you need to know, and each one of those main bracketed terms might have 3 or 4 under it. So you've got about 15 or 20 terms that you need to know. What's a pip? What's a moving average line? What's a market order versus a limit order? I mean, this is not rocket science. So you got 20 things to learn. God, Jesus, this is not that tough. And none of that stuff has anything to do with trading. Oh, these guys are Bollinger Bands and Fibs and RSI and London Open, and that's not trading. None of that is trading. No wonder you're confused and upset. It's too complicated. The currency market is the most complicated market in the world. I was a software engineer for 33 years designing complex business software applications. Very complex stuff. We learned how to look through the complexity of the problem we were trying to solve and break it into pieces, solve each one of those pieces. That wasn't quite enough that you could just solve those pieces, but then you had to put them together into a chronological order of execution, and then you had to figure out how to communicate information from one piece to the next piece so that it all went together. Now you could look at the currency market and say, well, I can do that. Well, no, you can't. Not unless you know that it isn't the currency market that you're trying to solve. That's not the problem that you're going to have to solve. It's very easy if you understand what trading is. And then you could look at trading and say, what's the problem of trading? First, you have to solve the problem of trading. And if that solution is correct, you can take that template and slap it onto the currency market and eliminate 95% of the clutter that's out there. That's what I did. And when I did that, I found where the problems are, and I wrote a rule to solve the problem. And the rules are easy to construct. From a software engineering standpoint, I can construct a rule which simply guides me in the programming that I have to do to solve that rule. And so what we learn as software engineers is a term called extensibility. The rule has to be extensible. It's a rule, but it's extensible depending on the circumstance that the program is in at that particular time. So you have all this price action going on and you're juggling it around, and what's the rule? Well, that's determined by the problem that price action is in at that particular time. What problem are you trying to solve at that particular time? So you take that rule and overlay that on top of the problem, and you say, well, what are the conditions that are going on at this particular time that are consistent with satisfying this rule? And if the rule is satisfied, then here's the action that I have to take. If the rule isn't, all those conditions aren't satisfied, then I can't take the trade, or I can't add to the trade, or I can't stage out a part of it, or whatever it is that your trading plan is. But you don't have to worry about any of that stuff as long as the rules that you're creating have this extensibility capability to it. Because when you're starting out, you start with $1,000 and you play the game with a fixed set of conditions for that amount of money and what you're trying to accomplish. And it's from that exercise that you learn basically how to trade. Then when you step up and you trade a full lot, you make 100 trades. And then you take those transactions and you create your trading metrics from them. And there's 4 different trading metrics that I use and that I work with folks on. But they have to go through certain steps in order to get to the point where the trading metrics are valid. If you don't understand what the process of trading is, then you wouldn't understand why some metrics may not be as valid as they should be. And that's just something that, kind of has to be discussed. You can't read it in a book because, again, a book isn't going to teach you rules that are extensible. The book can only teach you, oh, here's a rule. When you hit your profit target, close the trade. There's a rule. But does that have other conditions to it that would have you get out a part of the trade early or to exit the trade early under certain conditions? That's what I mean by extensibility. So you have to correct your current Forex trading mistakes, and you do that by having a simple plan. You're really going to have to reboot the whole thing. It's like when your computer starts acting stupid and it's slow and it just isn't going. You hit the button, you shut her down, let it cool off, pull the plug out of the wall, let all the electronics drain all the shit out of it, and then reboot and start again. And that's what I'm willing to do in working with someone, is I'm willing to help you reboot what you've done. But I can't help you get started, because you can go to babypips.com and do that. Why pay thousands of dollars to learn what a pip is inside your bank and what a Bollinger Band is when you can learn that stuff for free on Baby Pips? Why? Why would you do that? You don't need to do that. The reason that folks are looking for those beginner courses to learn that stuff is they think, oh, this is the secret sauce. I got to learn what a Bollinger Band is, and I got to learn what a London Open is, and I'm looking for an RSI that does such and such, and it's all bullshit. Because if you don't know how to trade, none of that stuff is any good. What good would it do for you to learn the function of all the gauges on an airplane console and the switches and all that stuff if you don't know how the airplane works? Oh, that's the left flap. Oh, great, I know how to work the left flap. But it doesn't tell you when to use it, right? So how you go about learning the solution to correct your trading mistakes is critical, because if you don't get the right solution process, you'll keep making the same mistakes, or you'll make worse mistakes than what you're currently making, and they'll look like they're different, but they're really not. You can only screw it up in a couple of ways. But when you look at the currency market itself and the experience that you already had in trading, it looks like there's an infinite number of things that you can do wrong. And they're not. There's only 3 or 4 different things that you could do wrong. But they're disguised in all kinds of stuff. And they're further hidden from you by all these people that are jabbering out there about, all the stuff that they jabber about with indicators and fundamental analysis, and you got to know what's happening with the ABC news release of whatever data that's covering, and this is how price is going to react, and you just can't. You have to start from a far simpler background. So for all of you that are writing me, how do I do this and how do I do that and when do you do it? Well, take a course and do it. But it's not worth doing it with me, because I'm trying to teach people how to replace their job income, not how to replace their light bill or what a PIP is. It just doesn't make any sense to pay that kind of money if you really don't understand any of the basics. If you've had a live trading account and you're trading reasonable leverage, do not ask me for help if you're trading at 100 or 200 or 500 to 1 leverage. I won't work with you unless you agree not to do that, because that's just the total asininity of bad risk management that I can possibly think of. Now, if you really know what you're doing, you've been trading for 6 or 8 years, and you've got the process all down, and you see a great opportunity, then you go in and you lever it up. But you're not there yet. Because if you're having trouble with your trading, you shouldn't be doing that. It will only end up costing you money. But if you've been out there in the trenches and you've traded a live account, at least 3 or 4 minis, so that you get an idea of what's going on. I mean, the ideal person that I'm going to be working with has the capability to trade at least 3 lots, because it's at the 3 lot size that you can lose some significant money if you don't know what you're doing, and you say, I can't afford to do that. I need help. And then you'll pay attention to me. But if you trade mini lots at $1 a pip, you trade 3 mini lots, it's $3 a pip, and you lose 30 pips, it's $90. It's a couple of pizzas. What do you care? Try losing $300 or $400 or $500 on a 3-lot position, and that'll freeze up your anal sphincter. Then you'll pay attention. If you need help rebooting what you're doing, then I can do that. But the only way I can do that is if you send me an email detailing what it is that you're involved in, where the issues are, and then we have something to communicate about to determine, do you really need to take a course? I don't want to have 40 people a month in my courses, because I work with you. You know, even if the consulting time was, well, I do an hour. Okay, so if I had 40 people, do I want to spend 40 hours a month? Or 40 hours a week? No, I don't. And so I'm very selective. I turn down a tremendous number of people that say they want to take my courses. I don't care how much money you have to throw at me. There are criteria that I can determine as to whether I'd be the good fit for you. But if you're really serious, you're having trouble with this stuff, and you see geez, if I really started trading more money, the losses that I would incur, I couldn't make that back from a dollar standpoint. You know, if you lose $90 trading 3 minis, you just go to your checkbook or write a check and you put another $90 in your account. It's not a big deal. You want to trade a 10 lot where it's going to cost you $1,000 or $2,000 to hit entry stop. Now what are you going to do? What are you going to do if you lose 20% of that $100,000 account? Or, you know, say you had a $100,000 bank, you're trading 10 full lots. You can trade it for $60,000, maybe. Well, maybe. At reasonable leverage. You could take $10,000 account and trade, boy, 20 lots when you should be trading one. That's why I won't work with you if you're trading at that crazy leverage. If you're willing to back down off the crazy leverage and you've been in the trenches and you've got yourself bloodied up and you're going, I don't mind getting bloodied up here, but I don't want to trade for a year to make money just to go out to dinner. I want to make some significant money. I want to be able to pick away and get rid of my job. Well, then let's talk about that. Let's talk about rebooting what you're doing and get you on the right path. You may not be able to start chipping away at that job income with significant enough money in 10 days, but if we work together for 3 or 4 months, you'll get the idea of it, you'll start making money, and I can show you how to put those things together so that you'll feel good about the results that you're getting from your trading on a percentage basis, so that you'll feel more confident in taking your job income and saying, oh, look, I'm going to take $200 a month or $2,000 a month or whatever it is, and I'm going to apply it toward my trading. And that's going to add up really quickly so that every $1,000 that you can put into that account, if you're making 20 or 30% on your money, that's $200 or $300 more, you know, that you're going to make as a result of adding it into your trading account when you trade with more lots. Well, consider that anyway, and thanks again very much for the emails. I'm sorry I can't help you out to reboot. I can solve your individual problems, and people thank me for doing that. But I know, and I think intuitively they know, that's not going to really be sufficient to reboot them so that they can continue to go on, because it's not complex. It's just that you have to peel the onion back far enough to really get a good whiff of it, to know what you're up against. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.